Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guests today are Matt and Amine from Arch. Hello, gentlemen. How you doing?
It's good to see you.
So many have tried to build a Bitcoin layer 2, and the battlefield is littered with bodies. As they said in Dune, they tried and failed. Oh no, they tried and died. So Arch is the latest to take a run at the castle. So why don't you guys tell me, what is Arch? First of all, what is Arch, and just generally, how does it work?
Well, generally speaking, Arch is its own blockchain. It's a side chain or layer 2, depending on how you define a layer 2 within the Bitcoin ecosystem context. But what's uniquely different about Arch is that we are completely anchored to Bitcoin state and Bitcoin blocks, so that everything that happens within the Arch network, it's always sentient of what's happening on Bitcoin. So that means that it's reorg resistant. That means that we can do more complicated functions and more complicated programmable things that Bitcoin cannot do. And then we can ship that computation, ship that data back to Bitcoin, where the data ultimately lives and it gets finalized. So you can think of it as like this, as like a layer 1.5. It's something what people call us, is because you have elements of a layer 2 where you have this off-chain computation, but you have also this element of total connectivity to Bitcoin, where we're constantly offering a more native experience to the user who may not want to trust Arch. We can allow them to participate within a more programmable DeFi ecosystem without necessarily having to bridge or wrap their assets into something else. And that really comes from, or stems from, the the connectivity or the closeness to Bitcoin that the Arch network design really is built upon.
Okay, so would you characterize this as a meta protocol or an actual layer 2?
Go ahead, Amine.
It's definitely not a meta protocol. Meta protocols only basically live on Bitcoin and they only do state changes. Where we also have state changes, but we also do asset transfers. You can send in PSBTs to smart contracts that live on Arch, and you can basically do asset transfers. And we feel like that's the part that's missing on all these L2s and also meta protocols.
Okay, so I would say, the OpNet guys are a metal protocol, and they basically replicated Ethereum on top of Bitcoin, but you do have to bridge into their universe, right? So you need to use, or you need to use OP20 tokens. You can't just use BRC20s and things like that exist on the raw Bitcoin chain. But I would say that they actually do allow full smart contract execution and full DeFi within the context of their universe.
They also there's also Tap who's also doing this.
Yep.
But all these meta protocols basically are just trading states. You're not really trading Bitcoin UTXOs. You have to bridge in whatever environment they have, whenever they're on on-chain indexers or whatever. But you need to basically bridge and then trade these state assets. On Arch, you don't really need to do that. You can actually send in PSPTs and actually use the Bitcoin UTXOs without compromising custody of your assets.
Okay, so just to be really clear, you can use BRC20s, you can use runes directly. So anything that's been created to date can work inside of the Arch universe, correct?
Yes, because you can really use Bitcoin UTXOs, anything that already exists, even all the meta protocols that existed, you can still use inside Arch.
Like Atomicals, for example, as well.
Yes, Atomicals. Sorry, I forgot about that one. I just personally don't use Atomicals, so the other ones are sort of top of mind. I noticed that I think Hermetica is, you either invested in them or they invested in you. I don't recall which it is, but there's a relationship there. Is that correct?
Yeah, we did choose to support the Hermetica team. We like Jakob and his idea for the whole Athena model on Bitcoin. We like this, and we just like to support the builders who are building in the space and being very active. So we've supported the Bima guys as well, which has a different flavor of stablecoin. But we believe that Arch is a really strong, unlock for these stablecoin projects who need to use Bitcoin as more of that issuance layer. And then wherever those tokens choose to delegate themselves down to different layer twos, whether it's Stacks or Bob, Botanics or whichever, it's totally up to the user, but they have to be created and managed on the base layer first. And that's what they're using our Frost multi-sigs to ultimately do. In the case of Hermetica, I think they minted 1 quadrillion runes, because with runes you need to pre-mint the supply, right? There's not a programmable function within the context of runes, so you can't mint and burn dynamically. So they need to use Arch to store these quadrillions of runes in a multi-sig, so that whenever the user decides to peg in the Bitcoin to release the stablecoin rune, that we're able to provide that safe and decentralized service.
Yeah, I think, NESD, the BAMP guys did the exact same thing. And a lot of people took issue with that. They saw the pre-minted, quintillion, NUSD dollars, plus the, quintillion or so BAMP or whatever it was. It was a large amount. It was basically they pre-minted everything that they thought they might possibly need, even in the event of the entire world using their stablecoin solution on sort of a Tether-like scale and then some, right? So, because you can't mint and burn, right? There is no way to do that. So you have to make everything you will ever need right up front. But that freaked a lot of people out. But then Hermetica went and did the exact same thing, right? So at this moment, there is that is the only solution. But as you say, they just sort of kept it. Previous to having a smart contract solution of some sort with a multi-sig, they just sort of kept it in one of their wallets. Right, which we don't know who has the access to that. Right, there is no way to verify that. So you describe your system as basically there's a secondary chain with smart contracts, which is the Arch chain, and that chain, there are smart contracts that can own Bitcoin wallets. And so that's how you add smart contracts into the Bitcoin universe, is you just sort of put the smart contracts outside of Bitcoin, and then the smart contracts own a Bitcoin wallet, which reminds me a lot of ICP, Internet Computer. That's how Internet Computer works with Track, I believe. But tell me what's similar. Do you agree with that, first of all, and then tell me what's similar and what's not similar about that method of solution.
Yeah, I would say that's accurate, but I feel like ICP started with the L2 and then got to add the functionality for smart contracts to have wallets, but actually started from the bottom up. The reason I say that, because there are a couple problems that you will encounter if you build such a system. First of all, these are two separate chains, and they need to be in sync all the time. ICP does not give you any guarantees around transactions confirming, around states and asset transfers being atomic. You can have a situation where ICP does provide the signature, and the state has changed on ICP, but the Bitcoin transaction didn't get into the Bitcoin ledger, which is that's basically a double spend, very problematic.
So a synchronization problem between the two chains. That's what you're saying.
Yeah.
Okay, and you've solved for that with your chain?
Yes, exactly. Arch basically gives you guarantees around state transitions and asset transfers being always atomic. Also, there is this massive problem with state concurrency. I know Cardano right now they're trying to pivot into a Bitcoin L2, which is quite funny. But
yeah, no, that is hilarious. I have to say,
yeah,
we're a Bitcoin layer 2 now.
Yeah.
Oh, really, Charles? Yeah.
It's really funny. But yeah, basically the problem with Cardano is you can't have smart contracts that don't have a unique state identifier. The way UTXO model works is basically you put in these UTXOs into the transaction as inputs, they get destroyed with each transaction, and new UTXOs get created.
Yep.
And when you're basically putting these smart contracts as hashes inside the UTXOs, you're basically destroying smart contracts and creating a new one every time someone trades. And for example, like let's say you have 100 people trying to use your app. What the server on the backend needs to give them like all the same transaction all at once, and they're gonna sign it, and only one transaction will eventually get into the Bitcoin ledger, because those transactions consume the same smart contracts, UTXO, and that basically is it's like all those transactions basically will have conflicts, and they can't get sequenced and pushed inside the block. So you get like 99 transactions that fail, and that's like really horrible user experience. So you need to have this like unique identifier for smart contracts in order for the validators to be able to sequence them and not have and have better user experience for the end user.
Hashrate is sponsored by Ledger. With the announcement of Ledger Flex and Ledger Stacks, Ledger gives you the best security on the planet for your crypto and identity. Ledger Flex and Stacks drive an e-ink screen with the same secure chip that's in your credit card and passport. Except, instead of protecting the secrets of banks and governments, Ledger protects your secrets and your private keys. Ledger supports Bitcoin, Ethereum, Solana, and more than 200 other tokens. The secure touchscreen, plus the Ledger Live app, means that whether you're buying your very first Bitcoin or doing your 2000th swap, you can do it securely and easily with your Ledger. And as always, use my link, shop.ledger.com/hashrate in the show notes to get the very best price whenever you buy a Ledger Flex or Stacks. OpNet is the ultimate solution for deploying smart contracts directly onto the Bitcoin blockchain, leveraging its security and stability. As a meta protocol, OpNet allows you to run Ethereum-style smart contracts on any UTXO-based blockchain, including Bitcoin and fractal Bitcoin. With OpNet, there's no need to rewrite your existing smart contracts from scratch. Simply deploy them on OpNet, and you're live on Bitcoin or fractal with no modifications required. Start your journey on OpNet today by visiting opnet.org. Okay, so I can use my BRC20s. I can use Ordi. I can use Pizza. You know, the fives, the whatever the 5 byte one is, the new one. I can use any of the stuff that exists in the Runes universe and the Atomicals universe, and that's all UTXO based, right? So our transactions in the Arch universe all UTXO? Is that everything that you handle? Not that that's a bad thing or a good thing necessarily. I'm just curious, are there other classes of transaction, or is it all UTXO?
So we have this like hybrid model between like an account model and the UTXO model. So all accounts on Arch basically have this UTXO that is basically anchoring the account. That is always used to anchor the account on Bitcoin. So that keeps the validators accountable for what they're putting in the Bitcoin network, and they can't really like hack the network since it's already on Bitcoin. Mm-hmm. So it solves this problem with state concurrency issues, because we have a pub key as the identifier for the smart contracts, but also on the back end, it's really like a UTXO model, since each account is basically anchored to a Bitcoin UTXO.
Okay. All right.
But to answer your question, Mark, we do have a second type of transaction that is essentially more scalable than what the UTXO model will allow for, and that is based on the account model. But it still has the ability and always has that guarantee around reorg resistance and state concurrency, because we have this anchored state UTXO inside of the multisig at that point.
Okay, so basically this whole thing works because you have the secondary chain and validators for that secondary chain. First of all, how many validators are there right now? And is it a proof of stake model where I have to put up some Arch tokens to become a validator in that network? And is there slashing and all the normal things that we're used to seeing in that kind of universe?
Exactly. There's hard economic security with slashing risk for all the validators and then the delegating participants as well. Right now we have about 26, I think is the official number of validators in the network. And these are not like amateur participants. These are all commercial validators from, the staking ecosystems, like the Luga nodes, the Galaxy, Edgevana. These are all companies with billions of dollars in staked assets in their possession, right? Through protocols like Solana, Aptos, Sui, etc. So we've got 26 of those, trending to about 40 at the moment. We'll do a new DKG, which is a key event where we distribute the keys to all the nodes, and we'll have about 40 in that next batch. And then we'll start open sourcing it and allowing more people to come in a permissionless way. But the first step was bootstrapping the network with a bunch of really quality partners, some of them obviously publicly traded, so that users have the confidence that these signers are trustworthy. So yeah. That's the main thing. And then to answer your original question, I think that the idea of this whole distributed multi-sig, it's really about, in Ethereum and Solana, you have these things like smart contract controlled wallets, program derived addresses. These things have to hold the funds so that when the smart contract rules are enforced, then the assets are shuffled around the layer one, which, however it was intended. So as long as you are trusting that the validators with the staked assets in the protocol are not going to act maliciously, that the assets will be shuffled around. It's not a 2 of 3 multi-sig or something like that, where anyone, not even us, have the keys to this multi-sig. It's really in the hands of these validators who all have economic security at stake, both their own as well as other users. So everyone is accountable in this particular system, but it has the piece of architecture that's needed in order to do this, multi-party thing like DeFi requires.
Right. Okay, so it sounds to me like the way this whole thing works. If I were to interact with a DeFi protocol, I would first need to upload my assets to that DeFi protocol and then perform operations on it and then sort of download it again. Kind of like the way I'm spacing the name of it. The dot swap. The way are you guys familiar with dot swap?
Yep.
Yeah, so
they'll be building on Arch as well. Yep.
Yeah. Okay. So the way the dot swap universe works right now on Bitcoin is I have to, everything's very centralized on there, which they admit, right? And so if I want to use their DEX, I have to upload my coins up to the DEX first, and then do my swaps, and then download the resultant coins afterwards, which is sort of like bridging, for that app briefly. Even though they don't call it that, in my mind, I think of it as like a mini bridge, and I don't think it's a terrible thing, but just to be very honest about what's going on, that is what you're doing. It sounds to me, based on the way your system works, is that I will, in DeFi protocols, have to do the same thing. Is that correct or not?
So it
really depends on who you are, the role that you're playing in this particular protocol. If you are the liquidity provider, the person that is depositing funds into a pool, yep, with the expectation of earning yields, then of course that requires some multi-sig and some place to put your funds, right? But if you are the person that is swapping against the liquidity in that pool, you're just signing a PSBT. You don't have to deposit your funds into anywhere, right? You're just signing a PSBT that's generated by the dot swap app on the front end. When you click that swap button, all you're trusting is Bitcoin. You're signing a PSBT and saying, okay, I'm only going to swap this amount of dog for this amount of Billy, right? Because this is the rate that the dot swap app calculated during the time that you click the swap button. Yep. And all you have to do is trust that Bitcoin is going to give you that exact amount of Billy in exchange for your amount of dog. And that's it. You don't have to trust DotSwap. You don't have to trust Arch. You don't have to trust anybody. So that's the beauty and the truly differentiated factor here is because of how close we are to Bitcoin and how intertwined we are with it. Takers, the person that is swapping against the liquidity that's sitting in the pool, can have a totally trustless, self-custodial experience in DeFi. which is very powerful because this is where they're all going to start. They don't want to wrap their assets first or bridge their assets first and deposit them, upload them, whatever. They want to be able to just click a button with their Bitcoin sitting in their wallet or their Rune sitting in their wallet and perform a swap transaction without having to trust anybody.
Yeah, I want the Uniswap I want the Uniswap experience on Bitcoin. That's what I want.
Exactly. Like it will feel as if like smart contracts are already on Bitcoin and you're swapping assets on Bitcoin.
Yeah. No bridging, no uploading, no dot swap. I love dot, and I am a big fan of dot swap because I think it's miraculous that they got it to work as well as they did. It really does feel like Bitcoin minus the upload the assets in advance. And if you're telling me that I don't have to do that inside of your universe, and it
will as a liquidity provider, if you want to earn yields,
that's different.
Then of course you have to trust somebody. And in the case of DotSwap,
that's fine.
For their second product, I believe they had that same ability where you could use a PSBT to swap against the liquidity that's inside the DotSwap multisig. But the DotSwap multisig was a lot more centralized, right? It was just like a 2 of 3 multisig or a 2 of 2 or something like that. But now they can pivot that 2 of 2 or 2 of 3 multisig to the Arch multisig, and now you have a much more decentralized liquidity provisioning opportunity, which is the exact implementation that Saturn chose to do, and that's what they're launching with right out of the gate next week. So we're hoping to see that a lot of the market pays attention to this implementation and realizes that this is the way to do it, and then everyone else will start following in line. But DotSwap, Magic Eden, Bitflow, Villar, there's a lot of quality teams out there that are all paying attention to this launch.
Yeah, I will say you seem to have grabbed a lot of mind share very fast. I had not heard of you guys at all. And then until like maybe 3 or 4 weeks ago. And then all of a sudden you were everywhere, just sort of in my universe anyway, of the things that I watch and on everyone's lips. So it's clear that there's a lot of people who believe in your vision and that you've captured a lot of mind share very quickly and builders, which is probably the most important thing. So congratulations on all that success. So you guys are not live right now, right? Or are you? Just
testnet, but we haven't really unlocked the floodgates quite yet for the Saturn product. There's some small little things that we need to fix. One of those things is that none of the wallets actually index for runes on testnet 4 right now, which is where our testnet is. Is thing. So there's a reason why, maybe Amine can jump into why we chose testnet 4 over Signet or testnet 3, which it has implications for trying to test programmable smart contracts. But we need to get on these wallets and the infrastructure providers and say, hey, look, we've got a whole bunch of developers who are looking to build this cool stuff for the community, but we need your support here. We need your support to help with the testing environment in addition to what features are available on mainnet. Right now, for any project that wants to build a product around a rune, it's not indexing. So if you did a swap successfully on Saturn's beta, which we have done, you don't see any of these runes in your wallet indexing. So it's kind of like a lacking experience in terms of that satisfaction that you get for doing that swap. So we're hoping to get Unisat and Xverse up to speed over the next week or two, but that's really what we're waiting on right now.
So to use your universe, I would use my Unisat wallet. Like that's fine, right? Yep. Okay.
Absolutely. You don't need a special wallet. We're on the same curve as all the Bitcoin wallets, so you don't need to leave any of your preferred tools or wallet infrastructure that you use to participate in any apps that are built on Arch.
Yeah, it's pretty awesome. I'm actually looking forward to trading some of my pizza. Because I got a big pile of pizza, and right now, if I want to dump it, I have to go on a Unisat and list 1,000 of them, list 100 of them, and it's just super painful versus the Uniswap experience, which I very much look forward to actually having with these assets.
Yeah, that's another. Go ahead.
You can see from the charts that these markets right now are like so illiquid. Like you see these like big wicks on Magic Eden because like someone panic sold and it like shot like the price and then like it jumps back up. Like that's a sign of a very illiquid market. And also like there are like so many inefficiencies. Also like if people like list like a big lot, like that no one will buy, it's basically like drives the price down. Where if like you list like a lot of smaller lots, people would just like buy them up real quick.
Yeah.
And
that's the issue, right? Like our fungible tokens aren't actually fungible. They're like these gift cards with denominations on them. And that's another like advantage that you get when you build these pools on Arch, because all of these individual UTXOs get combined into one larger one. And when the user pays the fee UTXO to settle the ultimate transaction on Bitcoin, that pays to split the exact amount that you need to facilitate the swap. So you no longer have to match liquidity on both sides. Like you have to try to go find the exact amount, like a 500 clip or a 20,000 clip of whatever, of pups. You can now just say, I want 600 pups, and just click the swap button and the exact amount will come to you. So it's fully fungible now because all of these UTXOs have been combined in the multi-sig, which is fantastic.
Yeah,
you're also getting the best prices and the tightest spreads on Bitcoin.
It's so much nicer. I mean, I kind of, honestly, this is what I expected Fractal to do. Probably you guys, I've been watching Fractal like a hawk now ever since we first found out about it, all the way up through launch. And even though it made a big splash and in some ways was a success, I consider it to largely be a fizzle. And I think one of the big reasons why, in my mind, is they have this very fractured namespace, right? So you have a BRC20 namespace on Fractal, and you have a Rune namespace on Fractal. In addition to that, you can bridge over assets from Bitcoin proper into the Fractal universe with the same names, but they're just like wrapped assets, right? So you have W Pizza or whatever it is, and you also have Pizza, right? Which is just completely confusing and bizarre and strange, and I have no idea what someone was thinking with that. But anyway, it was a very weird launch. I don't understand the logic behind it. So
and it's also didn't fix most of the problems. Like for example, state concurrency problem. Even if you soft fork opcats into your chain, like you're still gonna have the state's concurrency problems. Absolutely can't scale, and the faster the chain becomes, the bigger the problem, because like a lot more people will be using your app at the same time.
Yeah, it's probably why you see the majority of the activity is mostly in the creation of assets and not really the trading of them, because that's where most of the challenges really lie. With the state chaining and transaction limits and things of that nature, it's just really challenging to build a DEX even with Opcat enabled. And I think that's what people are starting to find out. And then to your point, I think it's interesting, like you could always bridge into the layer 2 with then Fractal, I should say, which gives you the wrapped version of that original asset. But then you could also mint like a native asset inside of Fractal, which never can get back to the L1 standard. So it's just like, what are we doing exactly? So I think we're exploring some interesting things with Domo and the BRC20 guys and Best in Slot guys. I mean, to see how we can create some more fungibility and more programmable things with the BRC20 standard, which will allow us to create this more two-way back and forth situation that no other layer 2s or side chains can really offer, which I think is going to be interesting for that that meta protocol, that standard, and how useful it can ultimately become. Kind of like what we were talking about before with the mint and burn lacking with runes. So it forces people to pre-mint quadrillions of tokens in anticipation of an unknown supply, right? So like if we can start to create more programmable functions around the fungible standards like BRC20, which unfortunately Casey has indicated the lacking of any desire to do that. Maybe that changes in the future, but these are the things that we prefer to see so that we can build around it. That's the goal.
Totally agree. So you guys have a gas token, right? So there is a gas token in your universe. And
that's right.
in order for me to, as a user, if I come to your Saturn exchange, do I need some Arch gas token in order to use that exchange? No. So we have a mechanism built in where if you're not holding Arch token, if you are holding Arch token, you can pay gas in Arch token, and then that gas will ultimately be burned. But
if you're holding Bitcoin and not any Arch token, you can pay in Bitcoin, and then that Bitcoin will be converted to Arch, and then that Arch will eventually be burned. So you're not necessarily forced to hold Arch in order to participate in any of these DeFi projects that are building on top of Arch. Yeah.
So when you say the Arch is burned, is that typical of Arch transactions where the gas fees are burned afterwards by the system?
Yeah, that's generally how the token is designed. There's generally two ways that you can do it. You can give these tokens directly to the validators as some type of reward for signing, or you could burn these tokens. And of course, there's going to be some type of inflation that happens due to the tokenomics. That's what rewards the validators. But either way, the goal or the purpose of the Arch token is to really incentivize the nodes for providing a valuable service, which is running the infrastructure in a safe and secure way, and make sure that it maintains itself over time as we start to build on it as a network.
Yeah,
Also,
that makes sense.
Just to add to what Matt was saying there, the Arch fee basically consists of two fees: a base fee, basically like paying for what the transaction consumed in terms of like resources, and there's also priority fees. The base fee basically gets burned, but the priority fees goes to the miner.
That's true.
To the validator.
Okay. And so I imagine you have an emission schedule that you're basically creating new tokens, and that's going to the validators, which makes complete sense. Of course, you want to do that.
Yep, that's right.
So what do the tokenomics look like? How many tokens total are there, and how much emissions are there per year or per block or whatever? Like, what does that look like?
I mean, did you want to talk about this or?
Yeah, we haven't.
I have the rough numbers from the tokenomic design team, but if you wanted to go through them, if you want to.
You can just give me like the outlines. That's all I'm kind of looking.
I think there are like 1 billion tokens.
Billion tokens. I think the initial inflation rate is about 6%, and then the terminal rate will eventually get down to about 1.5%. But that means that as tokens are being burned through on-chain activity, if the more that goes, which is presumably going to be more than that rate, then that means you have a sort of deflationary token at that point.
Yeah. Okay. Makes sense. And so your smart contracts, let's talk about that now. So what language, what virtual machine are you using, and what language do I write my smart contracts in?
So we're using eBPF, which is basically the VM that Solana is using under the hood. We basically forked the repo that the SVM, the Solana guys forked from, and we basically modified that VM in order to fit for data structures and hybrid accounts and UTXO model for Arch. And we basically use Rust for writing smart contract.
Yeah. Okay. That makes sense. So anybody who's done Rust before can just, so basically if I have a Solana smart contract, I could just basically port that over to Arch?
Yeah. Yeah, it's gonna be if you already know how to make apps on Solana, you're gonna find it really easy to build on Arch. You just need to maybe change the data structures a little bit here and there, but it should be pretty easy to do.
Yeah, Mark, it's an important distinction that I don't necessarily think a lot of people understand. It's we didn't fork the SVM so you can copy and paste another smart contract from Solana over, because there's different syscalls, there's different considerations made to Bitcoin architecture and design. So the VM is completely custom, built up from the ground. There are some things that we certainly borrowed or were inspired by the SVM, of course, with the parallel execution and independent states that we're storing inside of UTXOs. But the SVM does not use UTXOs. It makes no consideration of UTXOs. The SVM does not use PSPTs. It makes no considerations of PSPTs. So the reason why we can give such a native experience to the Bitcoin user is because we built this VM specifically to be used for Bitcoin programmability. That's why all these WASM, EVM, SVM forked products can't offer the same end user experience, because we explicitly are linked to Bitcoin. We are anchored to Bitcoin. and we are sentience of Bitcoin so that we can make all of these different considerations in the execution environment in real time. So that's why some users have to bridge, some users don't have to bridge. So that's why we're so unique in that regard, whereas everybody has to bridge into this execution environment because that's the universe that you're playing in. Our universe is kind of a puzzle piece and connected to Bitcoin.
Yeah, that makes sense. So I know just to compare it to OpNet again. So the OpNet guys have basically created Ethereum on top of Bitcoin, but it is a separate universe from the Bitcoin universe. You cannot use the Bitcoin native assets in their universe unless you bridge in, and I'm not even sure if you can bridge in at the moment. I don't think you can.
We've essentially expanded the universe.
Yeah, you went the other direction. You basically, and it's more difficult. So for that reason, I can't cut and paste Solana smart contracts directly into the Arch universe. Because you're dealing with UTXO assets. A Solana smart contract doesn't understand that, so you'd have to basically change things to understand UTXOs and the Bitcoin sort of data structures. Whereas the advantage to doing what they did, even with the disadvantages of the bridge and the not being able to touch the Bitcoin assets directly, is you can, in fact, cut and paste smart contracts directly.
You can. You can copy and paste Uniswap V3 fork. You can do an Aave, Curve, whatever script that you can find on the open source net. You can go and copy and paste that into OpNet. You can also do that on Botanix, Citrea, Bob, Proto Runes, Merlin, etc. Right? Like there's a whole group of people that think that the EVM is going to scale Bitcoin. We're a little bit in the counter camp that's saying, no, we need to figure out ways to get this programmability to act interchangeably with Bitcoin and finalize on Bitcoin as quickly as possible. So that's the challenge that we're set out to do.
Yeah, it's you guys have a really interesting thesis. I can see why a lot of people are interested in it. So how long have you guys been working on this?
I'd say last September is really when things got kicked off. Amine was working on this indexer, which sort of led into this much like before that. I would say maybe like early last year when ordinals really started coming out. That's when you started playing around with the indexer, right? I mean,
yeah, I was like playing around with the indexer, noticed how horrible like the experience, developer experience on Bitcoin is. By the way, I come from like a background of like writing smart contracts on Ethereum first, then moving to Solana, and now coming back to Bitcoin after like the ordinal boom happened. It's just like you can see like after like you can store states inside like transactions, all that's missing basically to make apps is just like putting everything together. And I saw like how horrible the developer experience was, and also like we did a couple of customer interviews, and we felt like the best thing to do was make Arch.
Yeah, you used Liquidium, Mark.
Yes, I
have. So we spoke a lot with Robin in the early days of Liquidium and tried to focus on the challenges that they were having because they started on stacks and then moved up to the layer one using DLCs. And we quickly realized that there's lots of projects that want to do more programmable things, especially in the fungible token realm, with BRC20s being very popular and then runes being somewhat expected at some point in the, let's say, later part of last year. They quickly realized that DLCs were not going to work for them, right? Because they don't do this multi-party thing, right? They're much more this peer-to-peer type of thing, which may work for a borrow and lending market for ordinals. But if you want to build an Aave style liquid market, liquid token like lending market, then you're going to need something that resembles liquidity pools. And that's when we kind of figured out that in order to give a much more native experience while also accommodating fungible tokens and a much more programmable thing, we need to do something directly on the base layer. It cannot be on a layer two where both parties need to bridge first or both need to do this more trusted dance. We wanted to do it where it's a more native experience at the same time allowing for fungible tokens and multi-parties to get involved. And that kind of led us to this design where We do use a multi-sig in our design in the most decentralized way possible, using Frost and Roast and a whole great network of signers. But that multi-sig can service the whole other market of users who want to self-custody their Bitcoin or want to participate in DeFi with just PSBTs and this much more peer-to-peer type of experience. So we kind of merge those two worlds together, and that's what allows us to be actually native DeFi to Bitcoin. And this is what we came up with. And I think it's a winning strategy. I think the user experience is going to speak for itself, where, like you said, you're going to get to use your Unisat. You're going to get to not have to download or upload any amount of tokens into an app or a chain or a bridge or anything like that. And you're just going to be a happy user of this particular swapping app or lending app without having to do much else. So I think that's what we really set out to do. And I think that it's highly different from what's out there right now.
Yeah, no, it definitely is. And you're right, the DLC stuff. I've been talking to some folks who are building a lending app, and that lending app is very much one-to-one. So it's not pooled, right? It's specifically designed not to use a pool. And that's really the key innovation that you need for an Aave, for basically pooled lending, for Uniswap, basically to have that like exchange experience. Probably even other things like Chainlink and like all the utilities that we now have on Ethereum and Solana, we need to have them on Bitcoin. And Stacks, took a run at it very early, but they don't really seem to have gotten the not a lot. People don't like Stacks. People don't like the user experience on Stacks. I don't want to rip on them too much because this is a very hard castle to charge at with your sword out, like I said in the beginning, right? And I recognize that, so I salute anyone who tried because it's a brave thing to do. And he who cracks it unlocks a $1.5 trillion market of liquidity, roughly 4 to 5 times as large as Ethereum, right? So
sure.
it is the holy grail, and so and I think that, and I do think the approach is the thinking behind them is evolving. Each new one of these things is better than the last one. And Stacks was like sort of, Neanderthal man, right? And then we have like Cro-Magnon man, right? And we're starting to, get to the modern humans, I think, finally at last here. So
it's good. It's good. Yeah. That's what we need. We need more innovation happening on Bitcoin, and we respect the hell out of the Stacks team. We have to pay homage to building when nobody else was interested in building in this space. At the end of the day, it wasn't cool to be building in the Bitcoin space a couple of years ago, and that's what they were set out to do. And now look at today, you got 100 L2s and 20 different LST protocols and stuff. So I think that we can all definitely pay a respect to them for that, but also we're aligned in the sense that EVM is not going to scale Bitcoin. They have their own VM, they have their own coding language, they read and write data back to Bitcoin. They have a Frost multi-sig that they use for the SBTC product. So like in terms of, the different types of designs that are out there, I think that we're much more aligned with them in their design than some of these other EVM compatible layer 2s that are relying on the BitVM approach. So that's encouraging to see as well.
Yeah, I'll say also the other sort of version of what you're doing that sort of sounded in my ears anyway, at least at first, like what you were doing was Track. And when BRC20s first launched, basically everybody had to run an indexer in order to see the state of who had what coins, but the indexers could lie. Right? Like my indexer might be totally different from your indexer. I might assign myself all the ordi, right? And there was nothing really that would stop me from doing that, right? So along came Benny and Track and he said, this is dumb. We should have decentralized indexers that work sort of like Chainlink, right? Something like that. And which I thought was a great idea. And then he basically came along and said, well, we should do smart contracts. And bottom line is, there was a lot of talk about a lot of big plans, and when it came time to actually deliver, Benny fell back to internet computer, and basically said, "Well, internet computer is really what's going to power all this stuff." And so we're not going to build it ourselves. We're just going to use the ICP and sort of plug into that universe. Which I felt like Benny was trying to do too much, but I also feel like that that was a bit of a cop out. That was not what was promised, right? So it's not the vision that we heard a year ago. So whereas you guys are in fact starting from scratch more or less and building a new thing, which I think is the right way to do it, because I think the only way to arrive at the future is to basically bake most of it from scratch yourself. So.
I would say, how much harder it is to build a VM from scratch. But personally, I don't know, because I'm not the one that's, like pulling these coding sprints like Amine and the product team is at the Arch team. Like, we have 11 engineers that are all extremely hardworking, and Amine's the leader of them. And we also have a great VP of engineering, Brian Hoffman, who came from the Kraken team, as well as a Bitcoin OG as well. So we're lucky to have the team of talent that we do. And I think that it shows in the products. Like, we don't lean on any existing technologies for one specific reason. And Amine mentioned it before. ICP does not make any considerations to Bitcoin because it wasn't built for that. So it can't offer any guarantees around state concurrency and reorg resistance. Right. So that's a problem from step one. And that's not for us, right? So we needed to do something different that made considerations to those things. And that's why we went through the hassle of building it ourselves. And, of course it is challenging, but that's what the Arch team is like out to focus on, that challenging problem.
Okay. So you guys recently announced a raise of $7 million, correct? Yes.
That's right.
And when did you guys close that? It was like a month ago or something like that, I think.
It's actually back in April, although the story probably broke closer to Token 2049 in Dubai.
That's
there was a lot of back and forth that we did with Multicoin, some legal due diligence and things of that nature. But we, for the most part, we closed the round much sooner than that. But yeah, there's when you're dealing with some of these highly signal touting VCs that, everything, all your ducks have to be in a row and stuff. So yeah, we closed the round spring and summertime, and we'll have a new round pretty soon. Actually, we're filling that at the moment. Actually, yeah.
Oh, wow. Congratulations! Well, pre-congratulations on that.
Thank you.
So, did you when you did this round, was this a token round or was it an equity round? Have you announced that?
It was a safe round with a warrant. So there is an expectation of a token, of course, over time, which of course will not come from the labs company. It'll come from the foundation, which is the offshore entities that manage this whole thing. And of course, that will not be sold to American customers. It'll be only available to offshore participants. So sorry for those.
I hate that. Yeah. Why are we always America's in with the kooky countries all the time? I hate that.
Well,
I don't blame you.
Contact your local legislator, and I know. With crypto reform, we'll see with this new election, see what type of reform happens. But yeah, it was a safe plus a warrant. The same will be said for this round as well. We'll also do a community-wide auction, likely in December. A little bit of alpha here. But that will be for users who participate in the testnet and want to, align themselves with the long-term vision of Arch. So, Tap did like a node sale. It's not exactly a node sale, but it's an auction that allows you to participate at a discounted valuation in anticipation of our launch. So that will be in December, and then probably a TGE in Q1 of next year.
Okay, I'll definitely keep my eye open for that. One of the things Fractal did poorly was they basically did 50% pre-mine for their investors. So I think even though when Fractal launched, that 50% was locked up, I think, for like 8 months or something like that. So it wasn't like it got dumped on our heads right away. But nonetheless, that doesn't feel good. So I hope whatever you do, the tokenomics don't look like Fractalomics, right? So.
I can say that our tokenomics and the requirements by even Multicoin were a much longer time horizon than Fractal. It's no shorter than 2 years for all insiders, so no one's going to be dumped on. And frankly, everyone internally, both the team and investors at Arch, we're all looking at this as a multi-cycle play. So this is something that we're interested in continuing to work on over the next 5 years. Yeah,
good. And then I know you did do an investment in Hermetica. We talked about that a little bit earlier, which is one of the native stable coins directly on Bitcoin, using the delta neutral hedge that Athena pioneered. And the other one that I'm familiar with is NUSD. the BAMP stablecoin. Do you guys have any relationship with them? How do you feel about them? Will you be supporting them? I assume probably you like everybody.
Absolutely. Yeah. We really like the way that they market themselves and build community for sure. Jack's a very smart marketer, and their team on the behind the scenes is also very, very good dev team. Like, we're very, very interested in supporting the quality cracked base dev. So if anybody's watching this and they think of themselves as a base dev, we want to work with you. It's not as easy as just copying and pasting a program like on any of these EVM rollups, right? So we want base devs who want to get the biggest share of the rewards, right? In the early days of Solana, that's how it was. They recognized that the technology was better, and they've all flocked to Solana in the early days to build and learn something new, and probably they're the ones that are succeeding the most right now. So those are the devs that we want to work with and support. So Saturn, DotSwap, BAMP, Hermetica, these are all very, very good dev teams with quality leadership that we like to work with. So Hamilton is another project that we chose to invest in because we like the team. We like the idea of tokenizing treasury bills and other RWA projects and bringing them on chain so they can be more accessible in a global market. These are things that we want to support. So that's just kind of the general theme of Arch, and we want to make sure that these projects have the capability of finding success, because if they are not successful, then it's hard to justify success in our world too.
Yep. Great speech. I applaud all of that. So we're coming up on the hour here. Is there anything that I didn't ask that you're like, Mark Jeffrey, when do you ask that? Is there anything sort of you're burning to tell us, or did I cover it pretty well?
No, you did a great job covering all the main points, put our feet to the fire with regards to OpNet and TAP and Track and all that. So appreciate that. Amine, did you have anything that you wanted to speak to? Maybe like a word from the dev team? We've gotten a lot of work done over the last 2 months.
Yeah, I think we covered pretty much like everything. I would say like if any devs are out there who want to build like some cool stuff, hit me up. My Twitter DMs are open. Let's set up like some Telegram channel. We can add you guys to the ecosystem chat, and let's build great stuff.
Yeah, I'll make sure both your Twitter handles are and the main handles in the show notes when I release this on X and YouTube and the world and elsewhere. Okay. Well, gentlemen, thank you so much for your time. I am definitely a fan of what you're doing here. So I wish you all the luck in the world. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.
Appreciate it.